Hi, I'm Steve Clements, and I have a question. Is oil driving Trump's latest foreign policy moves, or is there more to it? Let's get to the bottom line. He's the drill, baby, drill president. Donald Trump has been pushing the United States to expand its share of the global oil and gas market for years, ditching any desire to promote alternative energies inside the country, and more recently by taking over control of the oil industry in Venezuela. He's scrapped federal support for wind farms, and he's pulled the United States out of 66 international climate-focused organizations. So what is the new map of global energy, given where Trump is steering the U.S. now? What are the hard realities of the oil and gas business in the 21st century? Today, we're talking with one of the world's foremost experts in the politics and economics of oil and really all energy, Daniel Yergin, vice chairman of S&P Global, and he's author of The New Map, Energy, Climate, and the Clash of Nations. Dan, it's great to be with you, and I'm just wondering if the new map needs a revised new map, given what we've seen in Venezuela, given what we've seen for the scramble of critical materials. What would you do right now as we walk into Davos this week to change the new map and help us understand part of the new topography of energy and oil politics?
First of all, Steve, it's good to be on with you again. I don't think that the topography of energy can be separated from the topography of the world and world politics, the degree to which they've changed. But certainly we're in a different era in terms of energy. And I'd say that with what's happened with Venezuela, it's almost like itself, not a new chapter in a new book. But the other thing is what I wrote about in the new map, the criticality of minerals has only become more critical. I've come to Davos from a mining conference in Saudi Arabia with 20,000 people from around the world, and this focus on minerals. And that's very much caught up in the competition of nations, and particularly the rivalry between the United States and China.
You've written an article that really looks at, is Venezuela worth it? And you gave a fantastic, I think, fascinating and illuminating historical treatment of Venezuela's oil reserves, which are, as I understand them, the world's largest proven oil reserves in the world. But the complexities around them are great. Would it be easier to explain Venezuela today and the investment needs if oil were at $100 a barrel?
Yeah, I think it's very much. And I think some thinking is still as though we're in that era. But when oil is in the mid 60s or 60 or into the high 50s, it's very different. There isn't a sense of shortage. And one of the things that's fundamentally changed, wrote about in the new map, but it's even clearer today, is that world oil has been rebalanced by what's happened in the United States. The U.S. went from being the world's largest importer of oil to the largest producer of oil, largest producer of natural gas, largest exporter of liquefied natural gas, LNG. And that's really changed the balance. And so right now, still the question hanging over the market is at this point, it's oversupply. And where does demand go? It's continued to grow, but not at the pace that it did in previous years when China was driving demand for world oil as it did for 2 decades.
You know, what's funny is I have interviewed you in the past when the oil price was very high. People were worried that maybe we had hit, sort of peak oil, that oil was disappearing, that we would not have reserves in the future. And you were out there always saying, don't worry, there'll be a time when, a combination of technology and regulation and others will kind of do this. And we're back at this moment where we're back at a trough.
Right. Well, in fact, when there was all that discussion several years ago about peak oil running out, I went back and looked at my previous book, The Prize, and I saw, oh, well, the world has actually run out of oil at least 5 times. And every time, as you say, new technologies, regulation, and new geographies open up. Guyana is now a significant Western Hemisphere oil producer. There were something like 42 dry wells before they discovered what is now a very significant source of oil. So I think that the issue is investment and regulation and relations among countries. But Venezuela is a very interesting question because Venezuela, of course, was one of the founders of OPEC, one of the stars of world oil. And it was a petrostate, but under Chavez and then Maduro, it hardly even qualified as a petrostate. When you consider North Dakota, the state of North Dakota has been producing more oil than Venezuela.
Let's play a clip. I want to play a clip of President Trump's comments about Venezuela and oil and get your reaction.
Well, we're going to be running it with a group, and we're going to make sure it's run properly. We're going to rebuild the oil infrastructure, which will cost billions of dollars. It'll be paid for by the oil companies directly. They will be reimbursed for what they're doing, but it's going to be paid. And we're going to get the oil flowing the way it should be. As you know, it was just a minor flow.
So, Dan, I'm interested in the president's view of not only oil assets. You've written very, very compellingly about a race for a lot of assets in the world. Here he's talking about oil and gas in Venezuela. We also know, and this has opened up a conversation on Greenland, critical materials, the needs for all sorts of rare earths, magnets, copper. And I'm just wondering whether we're entering in a new era of a kind of extraction-focused driven foreign policy in the United States and maybe by other countries.
Well, there's no question that this administration is really focused on minerals and supply, and it's been accentuated by China putting the restrictions on what are called rare earths, and China produces about 90% of them. And, if you don't have them, automobile factories shut down, you can't manufacture things, your cell phone, can't be manufactured. So I think there is, I think, Steve, what's happened, we had about 3.5 decades of what we can call easy globalization, when goods moved more easily, services moved, and people moved more easily. Well, we know that era is over, and supply chains used to be something that, the only people who really paid attention to it were supply chain managers. They certainly were not things that they thought about at the executive level in a very permanent way in most companies. Now, supply chains have become very politicized. And right now, when it comes to minerals, the recognition that China really dominates the supply chains. And so it's a drive to diversify those supply chains. And we've seen that with the new executive order that the president just came out with.
So how do you see the global standing of the United States vis-a-vis China and other states when it comes to this important critical materials race?
Well, I think China has a predominant position in it. And of course, that wouldn't have mattered maybe 10 years ago, but it really matters right now when it's caught up in the overall tension between the country. I mean, we hear AI race, obviously chips, and rare earth and minerals. But the U.S. can't solve it by itself, because we're not going to build new copper smelters in the United States. There are not very many. China has maybe 50 or 60, and we have 2 that are operating. We used to have a lot more, and it takes time to build these. You got to get environmental permits. So I think we've seen efforts to do things on a more cooperative basis with like-minded countries. And it's just to diversify the supply chains. It's a prudent thing to do, and it's a necessary thing to do.
Is the world dividing itself right now where America is going to be the largest oil and gas fossil fuel superpower in the world, and China is going to be an electrification superpower, or am I oversimplifying it?
No, I think there's a lot of truth in that. I mean, the world is moving to being a much more electrified world. Our estimate in our new study on copper is that the world is going to use 50% more electricity in 15 years than it does today. So that's the direction. And I think China has set out to be dominant manufacturing company, dominant low-cost supplier to the world. And it's incentivized EVs in many different ways, not only financially, but if I can just tell a story, I was in Beijing riding with a woman I know, and she had a Tesla. I said, "Why do you have a Tesla?" And she said, "I have a Tesla because I have a 4-year-old daughter." And I said, "What does that have to do with why you bought an electric car?" She said, "In China, my daughter has to be in nursery school 5 days a week. I could drive a gasoline-powered car only 4 days a week. So therefore, I had to buy an electric car." So China has really pushed it, and it has made itself just this super manufacturing, low-cost supplier to the world. A lot of trade tensions over that. For Europe, it's a huge threat to the European automobile industry, which is, for instance, central to Germany. And I think the world is going to wrestle with this kind of dominance that China has. EVs are part of it, batteries are part of it, but in so many other ways, they have scale and overcapacity and are exporting that overcapacity, in effect, to other parts of the world. And that in itself creates a lot of trade tensions and economic tensions.
Of course, Dan, you're vice chairman of S&P Global, and I have this data on copper where we go somewhere, I think, from about 28 billion or 28 million metric tons of copper in 2025 to demand over 40 million metric tons by 2040, as you said. And so when you kind of look at that, how is the United States prepared right now for the copper race, for the kind of explosive growth you've just outlined?
Yeah, well, let me say, so we have, this is our new study, which just came out called Copper in the Age of AI. And it's really about the challenge of electrification. And, copper, is pervasive. It's in the lighting, it's, in your things in the studio and construction. Copper is the most pervasive metal in your cell phone. And all of that's just been the normal demand. And when we looked at it, we said, well, there's all this new demand that's coming in. Energy transition. Despite the slowdown in EVs in the US, more EVs were sold worldwide last year than all new cars in the US. Electric cars use 2.9 times more copper than conventional cars. Then you have AI data centers, copper intensive, they need it. Then you have the electrification of the battlefield and defense. And then you have, we're not that far away from starting to see more and more robots and humanoid robots. And that's how we get that build up to that demand growth. And then the question is, well, wait, where's the copper going to come from? So how long does it take to bring on a new copper mine? 17 years. Part of that is permitting. In the United States, to bring on a new mine in general, it takes 29 years because of permitting. So a lot of things have to change. There has to be changing on permitting, judicial review. There has to be investment, technology improvement, and new investment to meet this demand. Otherwise, we're going to, if you look out in the next 15 years, 2 billion new air conditioners in the developing world. That's copper too. So this really is a big challenge. And just last year, for the first time, the US government actually said copper is a critical mineral, which they had not done before, but it is now. And copper is the metal of electrification. So I think we're going to see more and more attention on it because of its importance in a world that is becoming more electrified and one in which China dominates. And it's not only mining, but the key area is the processing. That's where China really has its position. And it's built it up. It started because they needed copper when they were 20 million people were moving from the countryside to the cities every year. But now it's just, it's what was seen as economic has now been seen both by China and the United States, and by the way, by Europe, certainly by Japan as strategic. But, Steve, when you're going to go and develop a major new mining project, you're committing, billions of dollars to something that at this point won't deliver economic return for perhaps 17 years. So you really need to have confidence or conviction, as I heard from one miner the other day, in the future. And you need also to be in a situation where governments don't change the rules. A new party comes in and it decides to change the economics of projects. And that often happens too. And that's another roadblock to assuring the supplies that are necessary.
Let me ask you, Dan, about one of the world's hot spots and one of the world's cold spots, which may get hot. One is there's a lot of drama going on this moment around Iran and what might be changing in Iran. And I'm just interested in, how you see the oil and energy picture being changed by that. And then I'm also interested in Greenland, the cold spot, of whether or not there's a critical materials story there as well. But from your sense, what, on these kind of geostrategic agenda items out there, is there another side that kind of deals with some of the issues of oil, energy, critical materials in the new map?
Well, certainly Iran, it's hard to speculate because it changes from day to day what's going to happen. But you saw, I think there's a recognition that Venezuela is going to take time and investment, and you need contracts, you need stability, not to get investment, to get major investment, and major investment, just how bad it's under Chavez and Maduro. Just they ruined their oil industry, which was such an important source of income. Workers were stealing, tools and equipment and selling it for scrap because they needed money to pay for food for their families. So you're going to get more oil out of Venezuela, but to get major oil out of investment in Venezuela will take a lot of money. But it's, when you saw that when the tension rises over Iran, that's a different thing because the volumes of oil are larger and because of the strategic location of Iran on the Strait of Hormuz, through which about 20% of world's oil or something close to it moves every day. So and the oil price is more sensitive to that than what happens in Venezuela, because that's going to take longer to unfold. If Venezuela hotspot, or as they, say, it came in from the cold, it kind of rejoined the community of nations and had a different regime and had stability. And of course, we don't know what a post-theocratic regime would be. Then more Iranian oil would come into the market. But I think what we saw, at least as the demonstrations were building up, and then the threats from President Trump to intervene, that registered in the oil price in a way that Venezuela did not register in the oil price. On Greenland, there are different opinions. You talk to different geologists and there are different views as to what the mineral endowment of Greenland is and how long it would take to develop it and what the economics would be as opposed to being in other places. So I think it'd really be premature to make a judgment as to what the resource base is there. But, you don't have a lot of infrastructure, it's different type of living conditions and so forth. So it would take time, but it does underline the point that, rare earths, as often said, are not rare, but you need them in volume and then you need the processing. And that's where the Chinese have really, have the high cards. And we saw that high card played after Liberation Day when China started to put the squeeze on rare earths and, the threat that factories in the U.S. would shut down in a week or a week and a half. And it was like a wake-up call about the vulnerability of it. So, I think there is a concerted effort to find alternatives, both in terms of sources and in volume, and then in process.
Let me ask you a question about the power of Saudi Arabia, of Qatar, of the UAE. We've used to the sort of dominance that they had in OPEC, that they mattered when it came to the oil and energy equation setting. Is that power now gone?
No, I wouldn't say it's gone. I think the balance has shifted with the U.S. being the world's largest producer of oil. But the Gulf region is where you have a vast amount of inexpensive oil. And what we've seen over the last year is that those countries which had cut back on supply to kind of stabilize the price have been putting it back on and off depending upon market conditions. And at some point, it's expected that this amazing shale revolution in the U.S., to go back to your term, would not peak, but would kind of plateau, particularly if prices are lower, and that therefore we'd start to see a rebalance towards the Gulf. And I think Saudi Arabia continues to be, the predominant influence in oil that it's been, but the balance shifts back and forth. And also, Saudi Arabia, is a country that is thought to have significant mineral endowment, and to get 20,000 people coming to a mining conference from around the world to Riyadh to discuss global mining, but also to discuss mining opportunities in Saudi Arabia. The other area that they're playing a role that they didn't play so much before is their sovereign wealth funds, which have become very significant factors in the world economy. And they are also funds that can take a longer term view than, say, institutional investors in the United States. So they're, described as more patient capital. And I think their influence is only growing. And whether you're looking at AI or whether you're looking at minerals or even their investments in gas supplies outside the Gulf region, natural gas supplies outside the Gulf region.
One of the other conflicts that's out there where oil, continues to be part of the picture, but I'm not sure, who's winning, who's losing, is in Russia, Ukraine. And, some of President Trump's criticism of India for buying Russian oil, China, Russia, et cetera. How is Russia situated right now from its perspective as a major oil producer itself, selling oil, but also running into restrictions? Is Russia really feeling any of the international pressure, or are we deluding ourselves that anything the United States is doing is having any real impact on the Russia energy scene?
The Biden administration, the Europeans tried to put a ceiling on Russian prices, but that's kind of become irrelevant because of where oil prices are anyway. Uh, there are restrictions on it. Russia has had to sell oil at a discount, but its oil sales, and of course, it's lost its natural gas market in Europe. Putin tried to use the gas weapon, the energy weapon, and shut off the supplies, thinking he could shatter the coalition in Europe supporting Ukraine. And it turned out he was wrong. And a big reason he was wrong was because of this buildup of U.S. LNG, liquefied natural gas, which replaced substantial part of Russian gas in Europe. On oil, they continue to sell it, and that is very significantly is enabling Russia to fund the war. And if there really was a restriction, cutback in Russian supply, particularly now when the world oil market is oversupplied, that would be a real hindrance to Russia's ability to continue to fund the war. I mean, it's also interesting to see how Russia, really, its economy was oriented towards the West. It's now really become an economic dependency of China. And it's a raw material supplier to China. And Chinese goods have replaced Western goods in stores in Moscow and St. Petersburg and across Russia.
Let me ask you finally, Dan, about the kind of alternative energy scene today. We saw President Trump take the United States out of 66 climate-related organizations in the world. And one of the conclusions when you wrote the new map was very interesting to me. I thought it was very provocative, was that before Trump came in, that you could imagine a situation in which a combination of regulation, combination of good, earnest efforts to sort of, defossilize energy could create energy spikes in prices for countries through regulation, through a sense of a hyper climate sensitivity. They could walk themselves into scarcity. I'm interested in whether or not those realities are still there for Europe, for other parts of the world, and as the United States change that vector.
Well, the U.S., I mean, it is more or less a 180-degree change. It could not be more dramatic in terms of the Biden administration, the Trump administration on energy, including on renewables versus hydrocarbons, fossil fuels. But I think, the thing about the solar is, these will stand now in terms of how competitive they are. And solar is competitive. It's going to, over 90% of the new generation capacity that went in the world last year worldwide was renewable, was wind and solar. And I think they'll continue to grow. And I think we're going to see, the U.S. is really facing some tight situation in terms of electricity supply. And I think the answer is a kind of mixture of all of the above, and maybe make energy less ideological and more about engineering and markets and more practical. I think Europe has a big problem because they've gone really very extreme, not only in subsidies, but in regulation. And I think, it's made, and this is certainly something that we'll hear at Davos, it's put great pressure, and it's really pursuing policies that have led to the deindustrialization of Europe, making it less competitive. And that's a big issue for European governments, and it's a big issue in terms of what political parties people vote for in Europe.
Well, Pulitzer Prize winning expert on energy, Daniel Yergin, Vice Chairman of S&P Global, thanks so much for joining us today.
Thank you, Steve, and glad to have the chance to continue our long dialogue.
So what's the bottom line? There is what the Japanese call tatemae, the way things look on the surface, and then there's honne, or how things really are. The tatemae was that America's incursion into Venezuela and its grab and go of Venezuela President Nicolas Maduro and his wife was about drug trafficking. The honne is that it's all about the largest proven oil reserves in the world that America wants to control more of. But foreign policy is also about critical materials the U.S. is scrambling for as it competes against China. Tomorrow's AI infrastructure, the data centers, the power lines, the grid, all of that needs a massive amount of copper and lots of other stuff, as our guest Daniel Yergin just shared. The great race today among powers is for materials, for oil, for gas, for rare earths. It's like the early 1900s all over again. And in my view, it's creating dynamics that look a lot like neocolonialism 2.0. So watch out, world. America, Europe, China, they're all coming, and they want what you have in the ground. And that's the bottom line.